This Week in Startups is brought to you by LinkedIn. A business is only as strong as its people, and every hire matters. Go to linkedin.com/twist and get a $50 credit toward your first job post. Salesforce Essentials. Jumpstart sales and support by leveraging the world's #1 CRM at a startup price point at just $25 a month per user. Go to salesforce.com/twist for an additional 50% off and a free onboarding call. And Segment. Segment's startup program has exclusive deals with the best tools and resources to become a data expert. To see if you qualify for a free account worth up to $25,000, go to segment.com/twist.
Hey everybody, welcome to This Week in Startups. This is the podcast I've been doing for a decade where I interview founders and entrepreneurs and investors and technologists and gurus and opinion leaders, thought leaders, yada, yada, yada. If you want to be on the program, go do something important in the world. Do not pitch us. We don't accept pitches. To the zillions of PR people who are sliding into my DMs, who are emailing me, stop. If you're emailing me, you've disqualified your client. If your client is doing great work in the world, we will find them. You need not sweat it. Now, the exception there is if your client feels the need to have you contact us. CC your CEO when you email me, Jason at Calacanis, and say, Jason, our CEO, Susan, wanted to meet you. She's a big fan. We thought you'd like this, blah, 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 blah. And then let me have a conversation with your CEO. I don't want to debate it with you, PR people. And I'm not sending you the questions ahead of time. So if I book you for the show, don't have your PR person call me and ask me to send the goddamn questions. We don't send questions, okay? And if your client can't handle it, then why are you on the program? Don't come on the pod. All right, that's enough. It's just a rant because my email box is filled with PR people who want to negotiate with us. We don't need you to be on the program, okay? We don't need your client. And if you want me to send you the questions in advance, what are you scared of? And by the way, even if I send you the questions, do you think I'm going to send you the questions and then during the podcast, I'm going to be like, you know what? Oh, John from that PR agency thinks I shouldn't ask this question. It's only going to make me ask the question 10 times more. Whatever you ask me to not ask, it goes right to the top of my list. Dipshit PR people. Enough. All right. That's my rant. But if you're a unicorn founder, or you've invested in a unicorn, then you're almost automatically certain to be on the podcast because people who have built billion-dollar companies, they have figured something out. They could be lottery ticket winners. It's possible, but not probable. One of my great friends, Mark Suster, who's an amazing investor, and one of the most annoying people in the industry who I have to contend with, Howard Lindzon, who's truly just a horrible human, and both invested and won't shut up about this next company, Rally Rd. I'm joking, Howard. You're a consummate gentleman. And they told me, check out Rally Rd, check out Rally Rd. And I was like, wow, this is a brilliant idea. Who's the founder and can I invest? And I got to meet the founder, Chris Bruno, at the Upfront Summit. And he said, no, Jason, you can't invest, but I will come on your podcast. So I was like, I think he's doing something interesting.
I'm not sure that's exactly how it went down, but I'll take it.
Broad strokes.
No, broad strokes.
Broad strokes. No room for Jake Hal on the cap table. But you will come on the podcast. But anyway, welcome to the pod.
Absolutely. I'm just happy I didn't have the PR people reach out first.
Oh
we met
Do you have a PR
organically.
person?
Absolutely not.
Oh, God.
Not necessary with this business.
You're right. It's not necessary. And if you're doing something interesting in the world, having a PR person sort through the opportunities or maybe teach you how it works. But oh my God, am I having my time wasted by PR people these days? And I'm not saying all PR people are bad, so I don't need to fill my inbox with that. But the best thing for you to do as a CEO, if you're interested in being on a podcast or being in a publication, is pick your favorite writer and just email them and say, hey, I don't know, Malik, I really love your writing in The New Yorker. I think you're amazing, and I heard your podcast. I thought you might be interested in what we're doing. It's pretty cool.
That's right.
Blah, blah, blah.
Something interesting.
That's it.
That's right.
All right. What is Rally Rd, and why did you build it?
Rally Rd is an investment app where we take high-value, appreciating assets and turn them into stocks. And we built it based on missed opportunities, honestly. So myself and my co-founders always felt excited by alternative assets and different types of investing, and more comfortable in those places rather than in areas where let's say it's the deck is sort of stacked against you, right?
Okay.
So traditional equities, et cetera. I don't think it's hard to be the smartest person in the room when you've got people studying it for a living day and night.
So analysts are studying Netflix.
Exactly.
They're in touch with the management there.
That's right.
They have all kinds of proprietary data sets that
Correct.
they can tap
Yep.
to know if like Netflix apps are being downloaded, or maybe they have VPN data that shows the utilization of Hulu versus
Exactly.
Netflix versus
More
criteria.
resources.
Yeah.
Right.
So they have all this inside information.
That's right. And then by comparison, in alternative assets like collectible cars was the one that I was excited about, and music, for example, art, collectibles, things that my co-founders were excited about. We found that the information spectrum is actually quite flat. What really is missing is access. And that's something that you could solve for with great financial and regulatory technology.
All right. And that is a big piece of this. So you
Yes.
started off doing collectible cars.
Yes.
How many cars have you done funds for? Would it be a fund structure?
It's not a fund structure. So
Okay.
it's really, we tried to make it as close to the stock market as possible. So each deal is its own equity, and each car has its own security that is backed by that particular asset.
Okay. So it's an IPO,
It's an IPO. And
but it's
then
not traded on the public market.
it is not exchange traded, but it is traded on a secondary market that's accessed through the app.
Got it.
Yes.
So take us through one of these car deals.
Sure.
Or maybe we should show the app? Is that the best way to do it?
Yeah, absolutely.
So I download this app, Rally Road. I decide I want to invest in cars.
Yep.
And here I am. You've opened the app. I'll sportscast it a little bit. Beautiful looking. There's a 94 Lamborghini Diablo, which was, by the way, one of the coolest cars in the history of supercars.
Agreed completely.
The Diablo is gorgeous, but I don't know if that's a classic yet. It's a 94, 2004, 2014 plus 5. It's a 25-year-old car, which I think means it hits the classic designation at 20.
About right. Yeah, it depends on the country, but yes, here for sure.
So in the United States, 20 is a classic, 30 is
25.
25 is a
in the US,
classic,
yep.
and then what, 40 is antique?
Technically.
But 40 now means like the 1975 Corvette or Mustang, which were terrible. So
I mean, it depends on the decades, and a lot of this stuff is coming back around, right? That's where, you start to get people who get older who find it exciting. And a lot of the design trends you see, it doesn't just happen to do it with collector cars, but it comes in literally app design, and it comes in fashion, and it comes in all the different aspects of what you're seeing across culture.
But anyway, just back to the classic car example.
Yes.
The 60s muscle cars, which were classic cars to us,
Yep.
are they now considered antiques?
I don't believe so. They're
Okay.
still classic cars.
Classic cars.
Yeah,
Antiques means
pre-war. I think people think of it
pre-war.
more that way.
Got it.
Yep.
So a Model T, whatever.
Exactly.
So the classics are the 60s.
Yeah.
What do they call the 80s and 90s cars then?
Some people call them young timers.
Young timers.
Yeah, it's like a German word that people are using for them.
Young timers, like UN or
Exactly,
something?
Yes.
That's a good jargon watch.
It is.
We're doing jargon watch in all the Inside newsletter, so I'm going to put that in Inside Autos.
And
Young timers.
we don't discriminate by any sort of error. What we like to find are assets that bridge the gap between generations.
All right, so a 94 Diablo,
Yes.
that when it was new was a $175,000 car at the time?
Ballpark. This one is a little bit more. This is a really special version. This is the 30th anniversary version.
Got it.
And it also is one of 28 with what they call the Yoda kit, which is basically, this is the competitor to the F40 from Ferrari.
Oh, wow.
This is the best of the best, and it's in the right colors.
Okay, so it's $200,000. It's in great shape, and you guys are now buying it for $598,000.
Correct.
That's what it's worth in the market.
That's the market cap of this company right now that owns this and this single asset.
Got it. So now, how you say what? I explore this.
Sure.
I click the explore button, and what
Absolutely.
happens now?
So now we walk you through the story of this, and we really tried to build a storytelling type app with a transaction attached to it, less than a stock trading app, right?
Understand.
We didn't want to go over anybody's head. We wanted to give them the ability to dig as deep as they wanted to into
Great.
each individual
So
investment.
I see you have a slider here. It's a beautiful purple Lamborghini,
It is.
and it says here the
These are
comparable asset value.
Right. So these are all the public transactions for other SE30 cars that have transacted in the public markets.
Got it. It says 1 million, 3 million, 6
Right.
million, 1 year. Oh, that's 1 month, 3
1
months,
month, 3
6
months,
months.
6 months. And so here's here's an asset transaction at an RM Sotheby's auction, right,
Got it.
for $761,000. Here's another one, a listing that's recently up. So we try and
So
give
we're scrolling through all of these that have been sold.
That's
Yes.
right. And so we try to give as much information as we can in cars where there's 28 of them in the world. You don't get too many data points.
Got
But in other ones where like a 63 split window, which we have in here, there's hundreds and hundreds of data
Referring to the
points.
split window Corvette.
Exactly.
Which had the rear window.
Exactly.
And instead of one windshield, they put two and a bar across the back.
You got it.
Beautiful Corvette. Okay, next.
So then we try to sort of contextualize the opportunity and give people something to sort of dig in.
If you've got disco fever, the only prescription is this car, inside hook.
Of course.
Who's inside hook? Is that like some press? Or?
It's some press, yeah.
Got it.
And so
Okay,
it
so a
depends
little
on
bit
the
of press.
individual, and we tell it not join the conversation. So we have a sort of a chat stream that will be developed around
so
each of the assets.
investors can talk about it and say, we're overpaying, we're underpaying, whatever. They can talk,
you got
smack, whatever.
Then we walk you through the investment thesis fairly quickly so you can get a sense for it.
28 of the SE30 Diablos reside in the U.S. since new. Number 43 LD is one of 28 Jota cars produced. It's low mileage and highly original example of one of Lamborghini's most exotic supercars. Got it.
And if you want to dig in all the details on this individual vehicle,
which would be like mileage,
owners,
matching
numbers, owners, etc.
Awesome.
Everything you want, you can
now,
dig in there.
Now, do you do all that work to make sure it's matching numbers and vet it?
Yes, completely. And we put our own money into every single deal.
Okay, that's good too.
All common shares between 2 and 10% of every deal we buy ourselves, which is it aligns incentives and makes sure we're as responsible to every deal we bring out that is to for our community.
Got it. Okay, so you get some visuals, you get to see the video.
If you want to dig in here,
what does it cost you to find and source a great car and do your diligence?
Depends on the car.
Okay.
And we keep it relative to the value of the car, but we try to keep it to a couple of points at the most.
Okay, but what does it actually take you in terms of time to source a car? Does it take you 100 hours, 50 hours?
No. I mean, in the beginning, it was much longer because we were sort of new. At this point, we have inbound deals coming across the board.
So it may only take you 50 hours to
exactly.
source.
We have a team internally, and we have an external team, a network of brokers, dealers, auction houses, direct to collectors, and then our community is sourcing deals for us as well. So we're seeing hundreds, if not thousands, of deals on a monthly basis, and we curate down to the ones that are most interesting.
All right, when we get back from this quick break, I want you to explain to me what the ability to trade shares in these cars will be in the future, and then if you plan on actually creating, say, a series of 20 exotic cars, $10 million worth of cars, and actually doing an IPO that would be traded on the public markets.
Yes.
Will Rally Road do publicly traded stocks? When we get back on This Week in Startups. Have you tried to hire somebody lately? It is bonkers out there. It is so hard to find somebody because unemployment is so low and the top people have so many options. Let alone the fact that a lot of people want to work part-time or 4 days a week or from home. But there's all these great candidates out there who are passive job searchers. What do I mean by passive job searchers? Well, these are people who are hanging out on LinkedIn and they're, maybe talking to friends or doing in-mail, updating their feed, reading news, all on LinkedIn, which is one of the world's largest social networks, as you know, and the largest one for business, clearly. Well, what if those people who are not looking, the passive job searchers, saw your opportunity? Well, they might say, I like my job, but I think I'll love that job working for JCal at launch. That's exactly what happened. That's how we got Sir Charles, our new director, for our studio position here. We received 68 candidates in only 2 weeks by posting to LinkedIn Jobs. And I'm going to give you $50 right now. I'm going to give you a 50 just by going to linkedin.com/twist. LinkedIn.com, you know that. It's already in your URL. It's in your bookmarks because you're on LinkedIn multiple times a week, maybe a day like me. And if you go to linkedin.com and just put /TWIST, you get $50 right now. 50 beans. Go grab it, and you will find extremely high qualified candidates. We spent, listen to this punchline, $140 to find Charles. If we had hired a headhunter or we're posting on other websites, it would have been so arduous. Instead, it was easy. And the same thing, we have an office now in Toronto. We were looking for people up there. We found this amazing candidate, Maureen, who's been doing an incredible job for us. And when we posted, LinkedIn auto-populated our posting with some candidates. We started reaching out to them and we're like, who is this superstar? Boom, got him on the team. So once again, LinkedIn saved the day for me, JCal. It's just brilliant. LinkedIn has been building and building for over a decade, and now the benefit is here. The benefit is you can find the best people, especially if you're a great company and you take the time to write a good ad and put it on LinkedIn Jobs. Again, $50, linkedin.com/twist. LinkedIn.com/twist. I use it. I love it. I love reading the ad for them because I get excited about finding talented people to work on our team. Okay, speaking of talented people, let's get back to this episode. Welcome back to This Week in Startups. My guest is Chris Bruno. He is the co-founder and CEO of Rally Rd. You can do a search for Rally Rd in your app store. Is it on iOS and Android or just iOS?
iOS and web app right now.
iOS and web app. Perfect. You've been doing this for how many years now?
We started in mid-2016, but the SEC work ahead of time took a lot of the initial legwork to get this live. We've been in the market for about a year.
Got it. And so here, if we wanted to buy some shares in this, what do we do?
Well, very simply, as soon as the initial offering opens, and I'll just bring you back to another one.
Okay.
So this is our offering that's happening this Friday.
Ferrari 348 TS Serie Speciale.
That's right. So this is the most rare of the V8 Ferraris from the 1990s. They only made 100 of these, really spectacular example. Award-winning
V8.
example.
All right, I thought they were V12s and everything.
Well, they always made, V8 Ferraris are always they made a series of that, in terms of the rear engine V8 Ferraris.
Got it. Okay.
Yes.
And so this is only 138,000.
That's right. And
Super.
this is a deal, like, for example, as the community develops, we're able to move a deal like this in a matter of a few hours.
What's the minimum investment?
1 share. And in this car, that'll be 2,000 shares, so about
$500.
No.
Oh, no, 2,000 shares.
2,000 shares.
Not 200.
That's right.
2,000.
So $60, $70, yeah.
Oh, wow.
Yeah.
So this is like micro investing, nano investing.
And we have a range of investors across the spectrum, but for us, what was very important is no velvet ropes, right? We didn't want to take something that was for billionaires and make it available to millionaires. We wanted to take something that was available to now available to everybody. So remove all velvet ropes, essentially.
Okay. So here we're going to click on what? We'll hit Explore to start.
Yep, Explore. And then once you're in here, again, similar to the last one, you could work your way through.
Oh, I see the legal
comparable
documents.
transactions, right? The story, the investment thesis, the photos and videos, and then ultimately the timeline. This is every data point that we've collected on the history of this asset.
Great.
And then once this deal goes live, essentially what will happen is we run what's an initial offering, very much like an IPO. During that period of time, we raise money from our community, and those dollars go to actually acquire the asset on behalf of the investors in the deal.
Amazing.
Yep.
And so people can pay with a credit card or wire transfer?
Right now we do connect your bank account. It's super seamless, but we don't do credit cards just yet.
Yeah.
We're working on a gifting.
Is that because the SEC doesn't want people putting this on their credit cards? It sends a signal that it's not an investment. It's more like...
It's really not the SEC. It was more we didn't really want to make it where it just felt funny to have people, maybe taking, 20% interest to put their money,
in something that's not going to grow at 20%.
It just didn't feel exactly moral. But, there's other ways, like in our gifting flow, for example, if I wanted to gift you a share, that you'd be able to use a credit card for that type of opportunity.
What is your commitment? Let's say this is a $100,000 purchase. Of the $100,000 going in, how much would you be?
We would represent between 2 and 10% of every deal.
Wow.
Yeah.
And do you tell people what percent you are? And then do they read into that? Oh, you're putting 10% into this. You believe in it more than the one you put 2% into?
We don't. And we tend to try and leave as much open for our community as possible. We just tried to leave that flexibility so that we could play a different role depending on the deal.
So if it didn't fill up, you could fill up the rest.
Exactly.
Now, are you buying these on contingency, where you have an agreement to buy it if you clear a market? What happens if you don't clear a market?
Exactly. And so in most cases, we're taking option agreements. So I don't really like the idea of consignment. I feel like it doesn't align incentives appropriately. So if we're going to take a deal with one of our suppliers, we'll usually put something down to make sure they know that we have skin in the game as well. In the event it didn't fill. We've yet to miss one. In terms of we're very deliberate about, running our deals in terms of their investability as well as their marketability on the platform. So we try to be really deliberate about when and how we bring things to market. But in the event one didn't fill, it would go back to the owner.
Now, what's the deal? What do you get out of this?
For us, well, one, we get the opportunity to put these investments together. We take a small piece of the deal, the liquidity from the seller. And compared to, like, for example, if they took
what does that mean? A percentage deal from the seller?
we
Seller sells it for $100,000, you get 5%?
A little less, but yes, that's about right.
3%?
Something in that range, typically, yes. So, and comparatively to what that seller would pay to a dealer or an auction house, it's substantially more favorable.
What are the auction houses? When I watch that stuff on TV,
usually around 20%.
20%?
Yeah, and that's for cars. If you're in other asset classes, it could be upwards of 30%.
So it's like an app store VIG.
It
seems reasonable if they put together a giant auction and get all the buyers in the room.
Absolutely. There's no doubt about it. It's a lot of work. Yeah.
All you have to think about is, would I be able to sell this car for the same price, or would they get more than 20% for me.
In a different situation.
In a different,
Correct.
yeah. So in most cases, I think the answer would be yes.
Depends on what you have.
So if the thing's really in demand, it would just fly off the shelves
That's
and you'd find a buyer immediately.
That's exactly right.
Yeah. So if you own a beautiful modern masterpiece of a house on the hottest street in town, you could just do for sale by owner.
Just like any other asset
Just
class.
like any other
That's
asset
right.
class.
Yes.
So how many people participate in the, if you were to average the last 3 deals, how many investors were there on average in each deal?
In some of our smaller deals, it's usually a few hundred investors, and some of our larger ones, it's upwards of 1,000.
1,000.
Yes.
And it cost you $20,000 to set up the legal work for this?
Oh, absolutely not. No, with the way we have it structured, it's more like you could think of it like a shelf registration.
And
what
does that mean, shelf registration?
Sort of like when when you take a company public and you want to put additional securities on that shelf. So we've got it set up very templatized, where each time we put a like kind thing on it, it amortizes the cost over a larger base of deals.
Got it.
Yes.
So you created like a series of
Exactly.
documents for these kind of funds.
Yes, and they're not funds. They're actually all independent securities, and they're all independent from one another. So if, for example, one deal went bad for some reason, that would in no way impact any of the other deals.
Got it. If nobody wanted Lamborghinis anymore because
That's right.
there was some
They all have,
toxic reason that
they all have
asbestos
exactly
in them, whatever. Something crazy.
They all have their own securities. They all have their own EIN numbers. They all have their own cap table, depending on the deal.
And then you have to spend $500, $1,000 a year maintaining them. What does it cost to maintain them?
Under 1,000.
Okay, so you got, if you hold this for 20-year period, you have $20,000 in kind of like admin costs, plus the $10,000 or $15,000 in wire costs and setup costs. So it's about $30,000 to hold it for 2 decades, or $20,000 for a decade.
If you held it for a decade, it would be less than 20,000. So we've got it down, down to hundreds.
The reason I bring this up is, I do a similar thing with
Of course you do.
syndicates.
Sure.
At Jason's Syndicate, formerly on AngelList, we moved off AngelList because, again, back to the VIG. Why give them? In their case, they asked for 25. We were getting 10.
Yep.
But why give them the VIG? It makes no sense. And so you have to buy an asset that is, in order for it to be, you want it to be less than 10% costs.
Yes, absolutely.
Or else you have to spend the first year or two recouping. Yeah.
Yes. And we're not spending anywhere near 10% cost to get these set up.
What is the vision for how long you hold these? Because that's the other thing I don't understand. Do you just hold it forever and have people trade in and out of it?
It depends on the asset. And what's really good about this is we don't want to publish a distinct holding period, right? So in these types of illiquid assets, there's signaling risk in the sense of if you want to buy something, the price goes up. If you want to sell something, the price goes down. And a lot of that gets lost in terms of, you lose a lot of your sort of upside in that signaling. So for us, everything's always for sale. And so we're always fielding inbound offers to actually, we call them like takeover offers, to take the asset back private, right?
Got it.
Yes. And so we're getting inbound offers on a daily basis for all of the assets on the app.
So you have one of Jerry Seinfeld's former cars on there.
We do.
If somebody came on board to buy Jerry Seinfeld's former, what is it, a Porsche?
Yes, 89 Porsche Speedster.
Yeah. So if somebody wanted to buy his Porsche Speedster and I had bought shares in it.
Yes.
And somebody offers 150% than when I bought it. Am I forced to sell? Is it dragged along with the group? Who makes the decision?
So the decision is ultimately made by our advisory board of experts. We tried to keep it as democratic as possible, and they make the decision on our behalf. We couldn't run it as a true vote because, again, the costs of actually running that vote for what is essentially a public company would outstrip the value of the actual deal. So what we do instead is poll the user base and then leverage data, right? We've got this secondary market where transactions are happening, which show relative supply and demand and the sort of sentiment of the investment community over a period of time. So that indication plus polling the actual audience of investors, the syndicate, allows us to get a good temperature for whether or not it's a good time to sell or not.
How much does it cost to store these cars? Isn't it like $1,000 a year to store a perfect car like this and maintain it? Isn't there a maintenance cost?
There absolutely is, and we maintain our cars really well. What we've done is 3 different things. One is when we fund a deal, we put some money into the car's bank account. The second thing that we do is economies of scale. So we've very quickly been able to get our insurance costs, for example, near zero.
Okay.
And we're working our storage costs down similarly based on using the publicity and the scale of the
What
platform.
happens if something's broken, though? You take it out to drive it and test it, and the transmission blows. What do you do?
We that's a very, very high externality factor. The way the cars are cared for, they're not driven on public roads. They're literally turned on and brought up to temperature just for preservation purposes.
Got it.
So we keep that risk at an absolute minimum.
Got it.
And then the third thing that we do is ultimately, we're selling merchandise around each of the different deals. We're selling sponsorships around the collection as well. So we ultimately believe over the course of the next 12 to 24 months, we'll turn the collection profitable. So there's actually the opportunity to see these as cash producing assets, not as ones that actually cost money.
When will you take, I don't know, $30 million in capital and do essentially what these SPAC companies do or open-ended funds do and do, hey, we're going to put a $30 million Ferrari collection together, and we'll opportunistically over the next 2 years buy the best Ferraris we can get, and then take that and let people trade collectible Ferraris on the public market.
Sure. As the collection gets bigger, that's in sort of the roadmap for exactly where we're going. So I would say we're thinking about that over the course of the next 12 months or so, and is definitely built in. That's more of sort of an institutional product, I would say.
Yeah.
Yeah. And that's a group we want to serve. We really want to do a great job right now of addressing the consumer market.
You may need to have institutional or family offices say, hey, we want to have asset classes. We trust you. Put together the $30 million Ferrari fund. We'll take $25 million of it, but then you still have $5 million left for the long tail of your investors.
Exactly right.
What would it cost to take that public? Would it be like a Pink Sheets thing, or
it wouldn't cost considerably more. We haven't decided that we want to put anything on the public markets yet. Right now, we've done an incredible job of building that liquidity into the app and building our own marketplace. And so to open it up exposes those securities to a lot more external factors. Right now, we've got a system where we're able to be more deliberate about how we let it trade and when we let it trade in a way that's most appropriate for the underlying asset, right? And that's something that was important to us, right? We don't want this becoming a situation where there's large chunks of money and they're able to move, markets, et cetera. They're small cap companies and they're low liquidity. They're more liquid than the underlying asset itself. Yeah. But to put a micro cap company on one of those open markets, you expose yourself to a lot of different types of risks.
All right. When we get back, two important questions. When will the users of Rally Road be able to trade shares between each other? And when are you going to do your next category? Art, collectibles, magazines, toys. When will Rally Road add a second vertical when we get back on This Week in Startups? Scaling your sales team and your process is brutally hard. And this is where a lot of startups get themselves in trouble. They start to figure out sales, but it doesn't scale. Why doesn't it scale? Because you're not using Salesforce, which is the world's #1 system for doing customer relationship management. Everybody knows Salesforce works best. Salesforce is the greatest, but you might be saying, is my startup too small for this? Is it too expensive? Well, I've got great news for fans of This Week in Startups. Salesforce Essentials is easy to use, out of the box, and perfect for startups at a great price point. I want you to go to salesforce.com/twist, and you will get 50% off with an annual contract and free onboard training. Salesforce realizes that startups are growing fast and every dollar counts. So they want to get you early and support you early and give you a half-priced system. Salesforce is awesome, and it's going to be set up instantly, same day. And you're going to be able to do everything faster and better. You're going to be able to track your emails, track your calls, and all the meetings, all from within your inbox. So I want you to automatically connect all of your support channels to Salesforce and start doing it right. When you look at a sales executive's resume, it says that they're Salesforce trained and they know how to use Salesforce. And when they come into your building and they're in your office and they sit there, the first thing they say is, where's my Salesforce login? How do I get to my dashboard? The world runs on Salesforce. And now startups can get a great price with Salesforce Essentials. That's right, Salesforce Essentials is 50% off. I can't believe it. Thank you so much to Salesforce for supporting This Week in Startups and for supporting the startups that watch This Week in Startups. So get that 50% discount. I'm not sure how long it's going to last. I want you to get in there right now. Salesforce.com/twist. Scaling is hard unless you're using Salesforce Essentials, and then it's easy breezy, and you're going to get that startup price. So lock in your startup price right now. Salesforce.com/twist. Okay, let's get back to this amazing episode. Hey, welcome back to This Week in Startups. Our guest today is Chris Bruno. He is the co-founder and CEO of Rally Rd, which my friend Mark Suster, I believe Mark Suster, is...
Greg Bettinelli as well.
Oh, Greg as well.
Greg Bettinelli led the deal.
He led the deal. Greg did, from Upfront Ventures. And I guess Howard Lindzon found you before them and brought you to them. He was your angel.
Also true.
And how did you, unfortunately, wind up having Howard Lindzon on your cap table? Who was responsible for that disaster?
We originally met Howard through the folks over at FJ Labs.
I don't even know what that is. What is that?
It's an early stage fund that is in a lot of great deals.
Oh, really? Where is it?
I believe they're based in New York, but also they've got other offices as well.
And these FG people told you... FJ.
Yes.
Told you that having Howard Lindzon involved would be a net positive. Incredible.
And I have to say, Howard has been the best net positive for us that we've ever had.
Really.
He's been fantastic.
Absolutely. Yes. Not a liability, as everybody else says. In your case, he's actually brought something to the table.
In our case, he's brought a tremendous amount to the table.
Awesome.
Yes, we're very appreciative of him.
Yeah, no, I mean, it was bound to happen that he would actually earn it at one of these investments. I mean, the guy's gotten so lucky on so many things. But, you know, it's like they say, a broken clock is right twice a day. Nas is involved.
Nas is involved, absolutely.
Nas.
Yeah.
How did Nas get involved?
Through the folks over at WonderCo.
Got it. What's WonderCo?
Anthony Saleh and Jeffrey Katzenberg's new investment company.
Oh, yeah. I know about that.
Yep. And so they've supported us and made
supported us means they are an investor?
They're investors, absolutely. And they made the connection. And then obviously Upfront Ventures, Anthemis Ventures, people we're really proud to have in our cap table as well.
Is he going to is Nas putting one of his cars up there? He's got some nice cars.
We're going to work on that.
Yeah.
We want to pick our favors, very selectively.
When will people be able to trade shares between each other in the app?
Already happening. So,
really?
Yes, we've traded.
But that's not a feature in the app.
It is a feature in the app.
Oh, okay. When I talked to you last time, it wasn't productized yet.
Oh, no, we've got it. Yeah.
Oh, you got it. Okay.
Absolutely.
So I buy $1,000 worth of the Ferrari.
Yes.
I can trade it with somebody else.
Yes, you can.
How do I do that? Do I put them up for sale in the app or somebody requests them?
So the way we trade is we call it a trading window is the concept we developed.
Okay. And that's like people do for their secondary shares in a company.
Exactly.
You have a trading window.
Yep,
yeah.
exactly. Once every 60 to 90 days or so, we'll open up trading on each individual asset. We've done it for about half of them so far. During that period of time, it's a limit order book, bid and ask, where you could fully see the bid sort of work, and it almost auctions off. So it allows us to discover price and then transact.
Got it. So when it happened the last time, did anybody actually trade, or
Yes.
is it really?
Yeah, we've seen between
Give me some examples.
between 5 and 20% of the float changes hand in any given trading window.
Wow.
Yeah.
And that's because people want to profit take, or
some people, well, it's different types of investors. Some people want to make sure, take money off the table and reinvest in new deals as they're coming up. So maybe they've allocated a few thousand to us already.
Yeah.
And they feel like, okay, you know what? I'm going to keep diversifying that few thousand into more deals. So what we usually see is they reinvest or they hold the balance for a future deal that they're excited about.
What is the largest gain that's been recorded in a secondary share? Over what period?
22% over about 6 months.
Got it. So somebody bought a car.
Yes.
Do you know which one? Or
the 1990 Ford Mustang 7-Up edition is up 22%.
Wow.
Our 1977 Lotus Esprit S1 is about up 15%.
Got it.
Most of the cars.
Function of those cars becoming popular in that period, or you bought low?
Combination. Some we bought well, and they've sort of found their way to market value. In other cases, comps have happened over the course of that time. So with our 1977 Lotus Esprit, for example, we put it on the market at $77,700, right? It was a 007 car, so we thought it'd be fun to like.
Yeah.
And then after that, similar cars have gone for over $100K in the public auction market. So that shows up in the app. People see that as a new sort of comp point, and they've traded it up over the course of 3 trading windows in that direction.
And you got it like some sort of a garage in New York or a showroom?
We do have a showroom in New York where it's in Soho on Lafayette between Prince and Spring, 250 Lafayette.
Whoa. Isn't that like $20,000 a month worth of rent?
A bit less, but that's for us. It's the best customer acquisition cost we could ever pay.
So it says Rally Rd on the app.
It says Rally Rd. It's like you walked into the app, literally.
Wow.
Yes.
So they come in, they see all these.
You see
how many cars you got in there?
We've got one, and we rotate it monthly.
So
each month, the most expensive, the most interesting thing on the app is in the store live. You could come in and see it. You could learn the story of it.
You take the whole front of the store off to put the car in?
Oh, basically, yes.
Yeah.
It's pretty awesome. You should come see it.
Yeah. No, I'm going to be in New York. I'll definitely swing by. So, that's interesting. So you're using the retail to acquire customers.
Yes, customer acquisition tool for us.
So if you're spending whatever, $15K all in on maintaining that, and you get, I don't know, 100 people a month to become customers, you can just $150, you amortize it, boom.
Exactly. And it's way more than that. It's working really phenomenally.
$50 acquisition cost per customer. You would have to pay double that on Facebook.
Correct.
This is such an important point.
Yes.
This is like what happens on the podcast is like these little nuggets of wisdom come out. Everybody is obsessed with sitting in front of the goddamn computer doing Facebook ads, Instagram ads, Google ads, YouTube ads, whatever, LinkedIn ads. It's all great.
All great. We do them too.
All fantastic, especially retargeting. And they're all great for different reasons. However, you need to put that against real world, clever hacks. So if you get a storefront and it costs you $200,000 a year, but you're spending $1 million a year on advertising, otherwise you got to think about that showrooming. Maybe you could actually beat your CAC. Your customers exactly.
That's exactly what we're working towards. You got it. Yeah, and we love it. And honestly, for the type of business we do, the credibility that comes with seeing that asset firsthand, it changes the dynamic considerably, right? You take
there it is. Here's your little thing. Oh, so this is like a micro retail, like 1,000
micro
square
retail,
feet.
a little more, but yeah, basically exactly right.
Beautiful.
It's really well done, and my co-founder Rob is just so talented with this stuff. So he's got concepts for the next 3. He does merch that goes with every single car.
Got it.
And people are coming in, they think it's a showroom for fashion before they really understand it. They learn something, they download the app, they come in, the merchandise is spectacular, and each one is relevant, and the proceeds go into the car's bank account. So it really is a community on all levels where it's not just the investment, it's the experiences, the emotional returns, and then the merch and all of that sort of builds behind it as well.
Why not have like 20 of these cars and make it into like a car museum?
You're kind of printing the roadmap right here.
Oh, okay. Yeah. Sorry. It's what I do for a living.
Exactly. I wonder why.
Yeah, exactly. Why does that guy have 7 unicorns? And maybe 8 soon. You never know. You could have a giant showroom with 20 cars in it.
Yes.
And you could charge people to come in and see the cars.
You could.
And then
it's like a museum.
It's like museum of cars.
Sure, absolutely.
Which they have one of those in LA.
They do. They have Peterson.
Peterson
Fantastic.
Museum.
Such a beautiful job.
What do they charge to go to Peterson? $10, $20?
I think at least that.
Yeah. So maybe $10 you could start making money off of it. So you're saying if somebody bought the sweatshirt, or what do you have, like a little model replica of that car?
We don't do that. We've done mainly well, the really cool one we did with this was a Lamborghini scented leather candle. So it smells like it was custom made to smell like the interior of the car.
Lamborghini stoked about that?
I don't know. I haven't heard from them yet. We'll find out.
I was about to say, I wonder what the IP is if you make a version of your car, if you could resell it or not. I think if it's a version of yours, maybe. So you're saying if you had 20 of these cars in a museum, you could take, I don't know, half of the profits and give it to the 20 cars, divvy it up, and it could become...
Exactly, and that's how we turn the collection profitable.
See, this is where owning the Ghostbuster vehicles or,
fun,
the other vehicles that have been in movies, whatever, Back to the Future,
or something out of the Calcanis collection. You never
know,
right?
No. I'm not giving you... Actually, you know what? It's interesting. I do have 2 Teslas that are collectibles that I do want to figure out what to do with.
Yep.
Because I'm having a garage space issue, and I was going to give them back to Elon, but he's got too many cars as well. So I have Tesla serial number 1 signature of the Model S.
The Roadster?
Of the Model S.
Of the S, okay.
And I own number 16 of the Roadster.
Okay.
So they did the signature 100 of Roadsters. Yep. I have number 16. And then I have the signature number 1 of the first 1,000 signatures of the Model S.
Well,
I paid $150 for each of those, so it's $300,000 in assets. What do you think they're worth? Because they would be worth less as used Teslas, but
yes,
because the market hasn't started. These are only 5-10-year-old cars.
Correct. I mean, the Roadsters, I think, are trading in the 50-60 grand range.
Yeah, but I don't know about the signature ones.
The signature ones are more, and the fact, we've got some celebrity ownership here, so that obviously adds something to it. And then the fact that it's early like that, and
if
one owner...
If I got Elon to sign the dashboard, would that make it go up?
I think it would, and I think I'd love to do that deal with you.
Really?
Yes.
I would consider it only because I don't want to drive them anymore. I realize they have a value.
Yeah.
I would do it. Sure. Put the 2 of them up.
Yeah.
As one collection.
We could do it that way or individually, whatever.
I think if I put them both up for what I paid for it, $300,000. No, it'd be a little more, $400,000.
Mm-hmm.
If I put the 2 of them up for $400K, then I would be even plus 100, and I keep 25% of the shares for myself. So I basically break even, but I have 25% ownership in them.
On the upside. That's exactly the kind of deals we put together.
Oh, is it really?
Yeah.
See, I think that's the interesting thing for me, because I don't need the money. But I also don't want to have these in my house. I'd rather have you maintaining them. They could use a little cleanup here and there. They got a couple scratches, whatever. You do that, polish them up kind of thing? Or
Usually before we take them in, we have everything up to the point where they're collector grade, and that's it.
I upgraded the battery on the Roadster to the 300-mile one, so it's amazing. But okay, so we probably have to do $10K worth of work on them to clean them up.
And we could build that right into the deal.
Yeah, maybe. I think I want to do it only because I want to buy more cars.
There you go. This is the problem we help solve.
I mean, it's the problem for rich 1% assholes who like cars.
In part.
I want to, because the thing is, here's what I want. I want those 2 cars to be protected and preserved forever for other people to see and share.
Agreed.
So I was going to give it to the Smithsonian as a donation if I could get some sick donation for them. That, if they're collectibles, and let's say I got a donation for them for $500,000, and I had to pay taxes that year because a cab company I was selling shares in, maybe I had a profit, then maybe I could get some portion of my money back, and they would be in the Smithsonian forever. But I don't trust those guys at the Smithsonian with an electric car. Maybe. All right, let's make a deal.
Okay.
Because I'm a celebrity. You give Jerry. It wasn't Jerry Seinfeld's car. You bought it from.
We bought it from somebody who bought it from Jerry Seinfeld. So
I got it.
Yeah, we didn't go direct.
So wait, what am I negotiating even here?
We're going to do our research. We have to check these out. I want verification records. We have to make sure this is done right.
Yeah. How about an email from Elon saying
that'll help?
I want you to have number 1.
Perfect.
Okay, good.
That'll do it.
Put it on the dashboard. I need to have Elon sign the dashboard, I guess. I got to get a permanent marker. Would that increase the value, you think?
I think it would in this case.
In this case, yes.
Yes.
Because he's Elon Musk.
Yeah, I think this would.
Yeah.
It'd be great.
All right.
And we want.
But what would I be negotiating the deal? We're kind of aligned. It's not like you have some fees or something. Oh, you get 3%.
Yeah, but I don't. That's not
$12,000.
Yeah,
I would
that's not
want you to have it
significant to us.
anyway.
Right. It's more about getting it out there, getting the right people
even
involved
better.
in the deal.
How about this?
Mm-hmm.
If we put the first one, or if we put the collection in the Rally Road showroom.
Yes.
With my book in it and a photo of me, and I can move some books in New York, and then all the people in New York
will know
who said I would never become anything will be forced to go to Rally Road and see my Tesla there for sale.
Well, we both come from Brooklyn, so
exactly. Oh, really? You grew up in Brooklyn?
Yes.
Whereabouts?
Carroll Gardens, Brooklyn.
Oh, Carroll Gardens.
Yeah, and I went to school in Bay Ridge like you did.
Severian?
No, but
Delphi?
I went to Poly Prep. But
you went to Poly Prep?
I did, but our first employee on the team is a Severian. So.
Oh, very good. Yeah, Poly Prep.
Couple of problems lately.
Leave it at that. All right, when we get back, we're going to answer finally the question about when you're going to do another vertical. I love your business. I can't believe Howard Lindzon is on this cap table and I'm not. For me, it's sort of like, you understand the tension that this causes, because it's like, imagine you're, I don't know, LeBron James, right?
It's hard to imagine, but I understand.
Okay, it's not that hard for me to imagine because I'm
Fair
putting
enough.
up the best numbers of anybody at this moment in time. So it kind of feels like if you were to take the angel investing space, that
Sure.
I'm at the time of the game. Now imagine you have somebody who's in the game as well,
Yes.
but maybe they're not that bright, or maybe they're not that talented, but they're in there, right? Talented enough to be there, like J.R. Smith. You know J.R. Smith from the Cavs?
Sure.
He's a complete disaster, right? So imagine you're LeBron James, and you're going to win the championship. Right? Rally Road getting in the seed round is the championship in this metaphor. You understand?
I understand.
And all of a sudden, J.R. Smith leads himself to a championship while you're on vacation. That's the equivalent of Howard Lindzon winning this deal and me not getting it.
But maybe you two make each other better in that way. I mean, I've seen you interact, and I feel like there's something underlying this. There's a friendship there, and there's like
Well, of course there is, because, listen, when you've reached the level of performance, through hard work that I've hit, and a little bit of luck, obviously, I'm cognizant of that. And then you have somebody who's performing well below their potential and completely distracted and, just causing a nuisance like Howard or J.R. Smith in the league. You want to help that person, right? You want to help them, but you don't want to be beaten by that person. It's a very weird thing to be like the grand chess master and get beaten by somebody who's, barely knows the difference between a bishop and a rook. All right, when we get back, the next vertical. I want to know what it is. Maybe comic books when we get back on This Week in Startups. Every time I talk to a product manager at one of my investments, I ask them, how are people using the product? What's the most popular feature? How is it growing? Why are people churning? And a lot of founders and a lot of product managers don't know this basic information. which means they're flying a plane wearing a blindfold. You should not do this with an airplane, and you never would. Well, why are you doing it with your startup? Here's an easy way for you to understand how people are using your product down to the feature level, super granular. How long are they using each feature? How are they using it? And that lets you know, are you working on the right things? What if you're spending 100 developer hours this month on a feature that nobody uses? And then you don't know which feature is blowing up in your system that everybody's using because you are not using Segment. Segment helps you answer these questions definitively, and it gets rid of this ridiculous debate that I keep having at different companies, in different Slack rooms, in different chat rooms, trying to figure out on email threads what we should build next. Don't put yourself through this torture. Get Segment. Go to segment.com/twist, and you will get a free Segment account worth up to $25,000. I'm not even kidding. Segment wants to capture the startup space, and they are giving listeners to This Week in Startups exclusively $25,000 in product. Go to segment.com/twist. You can cut down on all this annoying integration by just putting a couple of lines of code in, and bing, bang, boom. All of your data is in one place, and it makes it easy for you to understand all the user journeys. The startup program from Segment, that's up to $25,000 in value. It is going to make your life easy and breezy. All of your discussions debating your product and service will switch from how you feel to what your users are doing. Starting your conversations with what you think or what your intuition tells you or what you feel, and having this back and forth for 45 wasted minutes. Start with the data. What are the users actually doing? Segment allows you to do that. Everybody is using Segment. Go ask 10 of your friends from successful startups. 10 out of 10 will be using Segment. Segment.com/twist. Get the 25 large. This is 25 large for you and your startup. I don't know how long Segment's going to do this for, but it's a great deal. Segment.com/twist. Thanks again to the team at Segment for making a great product that so many of my portfolio companies use. And thank you for supporting our mission here at This Week in Startups to educate and inform and inspire the next generation of entrepreneurs. Okay, speaking of which, let's get back to this amazing episode. Welcome back to This Week in Startups, Rally Road. What a great vision, Chris, honestly. It's such a great idea.
Thank you.
And I really love the execution. The app looks spectacular.
Again, not me. That's all Rob, my co-founder. He's got a real gift for that.
Yeah, no, it's and high five for giving the co-founder equal credit. And I'll give Howard Lindzon some credit. I mean, he did figure out a way to find a winner here, and I'm as shocked as the next person. But congratulations to Howard. What's the next vertical that you're going to get done here? I mean, I was thinking art, but art is got so many incumbents who will not want you involved.
Correct.
But comic books,
yeah,
and collectibles in that area,
yeah.
Now that's a winning idea.
Yeah, that's exactly where we're going.
Go. So, okay, great.
All
right, everybody. I've just guessed. Welcome to Guess the Roadmap. It's funny when it's like you hear 1,000 pitches a year. It's pretty easy to guess. Yep. So you're going to do comic books and collectibles next. That makes total sense. Movie collectibles, that kind of stuff.
Yeah, sports as well, which is really huge vertical.
Yum.
And we really like wine, whiskey, and watches as well.
Wine.
Yeah.
Total sense. See, the more fragmented the space,
correct,
the better it is for you because
correct.
There's nobody controlling supply. Art, you have people controlling supply.
Correct.
And the lower the price per item and the more number of items, that means there's more velocity.
Exactly.
So cars, there's a lot of cars. Exactly. A lot of different makes, a lot of different years, a lot of different conditions. And comic books and wine, there are billions of copies of comic books and bottles of wine. So you've got an unlimited opportunity. So you're saying you could go buy a bunch of Screaming Eagle or Opus One.
Sure.
And then you have to maintain it. That's a little expensive. That's a couple of dollars per bottle per year. And you have to validate it. So which one are you going to do next, do you think?
Memorabilia and collectible.
Yeah, that makes total sense. What's great about that, too, is if you do a storefront and you do all the Simpsons collectibles, you got something going.
Exactly.
Oh, my God. What a great idea. How many people work there now?
About 20.
20, perfect. All in New York? Or
all in New York. We've got a few of our developers remote, but for the most part in New York City. And our HQ is right above our showroom.
Makes total sense. Yeah. See, I think retail have a really great investment right now in a company called Neighborly. They're
Yeah.
taking they're taking retail locations and turning them into community spaces, or essentially what would be WeWork of storefronts.
Yes.
And they're in our accelerator right now, and I'm in love with the idea that you have all this, like on Lafayette Street, like there's only so many gaps, and
Yeah, banks and coffee shops, the only things that
there's
can
only
make
so
money anymore.
many
Exactly.
you can make
right.
money anymore,
Yep.
and it's not going to be a hardware store or a Radio Shack. Like they're all gone, or a pet store. Like they're going to go away too. Like Amazon's killing everything, so you can have this extra retail. So I'm guessing you got a sick deal.
We did, and we actually have the Amazon store around the corner from us as well. So
Right. And this is the interesting thing. You're looking at retail for customer acquisition. I think actually the Amazon stuff, those Give and Go stores and all that stuff, I don't think that's about selling what's in the store. You know what's about selling?
What do you think?
Take a second. What are they actually selling there?
Data?
No. Something else that Amazon has that people always underestimate, but it turns out is actually the driving force inside of all their decision making. It's not AWS, the cloud. It's not Amazon, Alexa. It's not content, and it's not e-commerce. There's a singular thing that they have that has grown and prints money for them. It's called Amazon Prime.
Oh, sure. Okay.
And every time somebody comes into Whole Foods now, or one of those Amazon grab and goes, I don't know what they call them.
Yeah, 4-star stores, et cetera.
All that stuff, bookstores, whatever. It's just a way for them to upsell and get people onto Prime. And you'll start to see that. Some of those stores, you're going to go in and see two prices, Prime members, non-Prime members.
Yep.
And when you walk out, they're going to say, Prime membership's $100 a year. You would have saved $18 right now. Would you like a Prime membership? Boom.
Of course you would.
They get 1 out of 5 to do it. Boom. Bing, bang, boom. Who's buying these shares in these companies? Who is it?
So our average investor age is about 27.
I'm sorry, what?
Average investor age is about 27.
27.
27.
You're putting a 2 in front of the 7. I would have guessed 47.
No, 27.
Young people
Yes.
have no money and don't care about their futures. That's what we're told.
No, not at all.
Okay,
Yeah, it's
so-
young self-directed investors.
Got it.
Yeah.
And they think this is fun.
No, they think this is diversification.
Got it.
And they are very in tuned with the idea that ownership and possession and utility are not the same thing, and they don't have to be connected with each other anymore.
Ownership and utility.
Possession and utility, right?
Yeah.
It does. They don't have to be one and the same. So that's native for them, and becoming self-directed, and they're more comfortable investing self-directed behind themselves, learning, doing the diligence themselves, and then making a decision, as compared to, like, it's not like they're going into JP Morgan to make that decision for them, right? In fact, they've been alienated in most cases by those types of institutions. And so here you've got young people who want to be diversified, who are thinking about their futures, and they want to have access to this. So what's nice though is, I mean, we have a very diverse investor base. You could have a 21-year-old investing with a 70-year-old in a car that the 70-year-old grew up in, and the 21-year-old thinks is cool. And that's something that is important.
Robinhood, when they pitched me, they had the same idea, which was similar idea, which was like, I was like, what are you guys doing at Robinhood? They're like, we're going to make an app that gets young people to trade stocks. I'm like, young people don't want to trade stocks. They don't get it. They don't want to do it. They're like, yeah, no, we have a hook. We're going to get them in. I'm like, what's the hook? They're like, we're not going to charge them. I was like, so you're going to get a group of people who have never done this behavior, and the way you're going to build a business around them is to lose money from letting them do it for free.
Correct.
And they said, yes. I said, I'm in. Because if you can convert a group of people who aren't doing the behavior,
Yes.
what is the prize? See, this is what you got to think about. What do you win? Not what are the chances I win? And this is the fundamental problem with people who are not degenerate gamblers. They think, I have it's going to be 51-1 that I pull the ace of spades out of the deck.
Mm-hmm.
So I got a 1 in 52 chance, roughly 2%. Let's call it 2% for, let's say you took 2 of the aces out and you just left 2 of the aces in, the ace of spades and the ace of hearts.
Okay.
So you got 50 cards in the deck. If I told you, pull the ace of spades and get $100, would you do it?
Wait, what do I have to put at risk?
Whatever amount you want. $100.
Right.
Pay $1.
Pay $1.
I'll give you back $100 if you pull the ace of spades.
Right. So my expected outcome is
Yeah.
$2, and I'm paying $1 for $2.
Correct.
Right.
You would do it all day long.
Of course.
Most people would never do it because the majority case is you do not win the 100 for
Right.
your $1 bet. But anybody who can do math or thinks about it is those are better odds, so you should do it. And that's why people who are playing poker calculate pot odds and just do basic calculations if it's worth doing or not.
Sure.
And in your case, it does seem silly, like cars, okay, whatever, like car people are weird. What you're looking at is, what are the chances that finite coveted items increase in value over the next 20 years?
Correct.
It's 100%. Like,
Correct.
they're coveted. They're not going to go away. Now, as the global market becomes Western,
Yep.
the number of people who covet the things the West covet goes up.
Correct.
So I look at this as a global play.
It is a global play.
People in China, at some point, and in Japan, figured out Macallan was a great scotch. And in the Middle East, they did. You know what they did with all the Macallan? They bought it all up. Same thing, Pappy Van Winkle, whatever, wines. So all these wineries. And then what happened when the Middle East started printing money from their oil? They started going to Ferrari and saying, we'll take all of them. And Ferrari doubled their, I don't know if this is true or not, but I was told at some point the Middle East was buying so many Ferraris that they were buying
Up their production, right?
They doubled their production to keep up with the demand from the Middle East alone, and that half the Ferraris were just being shipped to the Middle East with crazy, wacky custom stuff on them and never being driven.
Yep.
And that somewhere in the Middle East, there's
Troves of these things, yes.
thousands of them
Yes.
owned by individuals that,
Yeah.
if they were on the market, I don't know what that would do to the market. But anyway, is the play here that people in India and China will join the middle class, the upper become rich and ultra rich and want to buy these things eventually?
I believe that. I mean, I think that's the goal, right? People go from sort of shows of wealth to stores of wealth, and these are, you can't reproduce the marquee Lamborghini, the marquee Ferrari, the marquee Porsche, right? They're just ingrained in society, and as we keep going to more and more homogenized things, it seems to me that these handmade these analog things have that inherent value that's going to be very important. And I think young people get that. I mean, I certainly did. The other thing that I really always thought about was, so I have a limited set of resources, right? And in that limited set of resources, things I like collectible cars, right? That's something that I'm really personally passionate about. So for me, I always thought about, if I have $100,000, let's say, that I'm going to dedicate to this thing that I care about, I could take all 100 and buy an investment / car that I use and enjoy. And I'm suboptimally invested on both ends. If I use it, I'm hurting my investment. If I don't use it, I'm hurting my enjoyment, right? But am I better off buying the $60,000 version of the same exact car, driving it every weekend to get coffee,
Not worry about it,
and take $40,000 and invest it with Rally Road across all of my...
It's so great, because
That's right.
I want to get one of the 70s Stingray Corvettes. You know,
Sure.
the ones like
Yes.
the big...
Spectacular.
But
Yes.
nobody wants those. Nobody wants a 73 Corvette.
You'd be surprised.
They go for 20, 30 grand.
Yeah.
I mean, it's not like the 60s where they're going for 50 to 150, right? But a drivable, numbers not matching, Stingray, 20 grand in perfect condition.
Have a great time. Exactly.
Knock yourself out.
Knock yourself out.
Don't worry about the tranny. Don't worry about the engine. It's
That's right.
an irreplaceable engine. It's a replaced engine.
Exactly. And then take the rest of the dollars you've saved and invest them appropriately on, one of a few spectacular museum quality things that have been treated as such since the day they were born.
Maybe I'll give you my 2 Teslas. I keep 50% ownership. Instead of taking the other 50% of cash, which I'd have to pay tax on, I believe. Maybe. I don't know. Maybe the depreciation, I don't know how it would work.
They've done some things with the exchanges lately that makes it a little bit harder to do things like that, but we could.
But anyway, I could, instead of taking the money out, put it into another asset maybe.
Exactly.
So instead of, I could contribute the 2 Teslas,
Get something you enjoy more and
then,
keep your upside. That's right.
Well, whatever. I would just tell you, take let's say it was 200, I still own 50% of the 2 original Teslas. Then I take the other 50% and I say to you, I trust you, the next 20 deals, just put me 10K into each deal.
Absolutely.
So now I'm diversified.
There you go.
And I don't have to have a tax transaction, and I get these things out of my garage. So my wife is like, we can park our cars in our garage, because I have 5 freaking cars now.
Right. Win-win.
Well, no, the 2 other Teslas I can't drive, so I bought 2 new Teslas, and now I've got 4 Teslas, which means I have to have 4 cars plugged in, and I'm like, I have 3 Tesla chargers in my house. It's ridiculous. It's, I know it's a...
Problems.
Well,
there.
the problem is I wanted to really see us get off of carbon and the ICE engine. No offense to the ICE engines, but I think they're better off in museums and being, we obviously all want to get off fossil fuel. So I was like, I looked at my investment a way of supporting Elon and the team and helping get the Model 3 out. That's why people paid $150 for the Roadster and then whatever, $125 on average probably for the Model S and X in the early days. And I was like, instead of donating to Greenpeace or whatever worthy charity, if you donate to Tesla, you get the car, you get to drive it, you get the utility, but you also get to have something that could actually change the world, and it has.
Agreed.
Yeah. And then I would be able to park my cars in a garage. Oh, this could create domestic tranquility.
What's the value in that, right?
Well, no, I'm just, I think there's a lot of people who buy all these cars and then they realize like it's taking up space, it's maintenance, it becomes cognitive overhead, right? So just to the Maria Kondo thing, there's got to be people out there who own 40 cars, not 4, let's say 4. And they're just like, I got to get 2 of these out of here.
Or 40.
Or 40.
Yeah. In fact, a lot of the really great collections, they're huge, right? And they're operating them as businesses. That's the reality of it, right? If you have 40 or 400 cars, right? They're operating this as investment. That's something they enjoy and value the preservation to be a part of it.
All right. So you did the last round with Mark Suster. I'm going to guess you raised
Greg.
10 million. And Greg, sorry.
Yeah.
Raised 10.
We raised 7 in our Series
7.
A.
Got it. Okay.
Yes.
Congratulations on that.
Thank you.
What do you have to show to raise a Series A today in Silicon Valley?
I mean, you have to...
Or in the tech industry, I should say.
Product market fit, right? So, and my background's adventure, so I've always tried to be very deliberate about this is what we have, this is what we're gonna prove, right? And
you were in venture before this?
Yes.
Oh, so you know.
Yeah. And so that's my philosophy is, it was an idea and we're going to raise money against an idea to show that we can make it look like it's a real business, right? And make it legal.
And that was the Howard Lindzon check. That gets
That's
you to that $2 or $3 million in seed, gets your product market fit. Then you raise the 7 to scale.
Exactly.
They buy 25%, so the company was worth about $30 million when they put their money in. I'm going to guess, back of the envelope. And you've been at it for a year. You've accomplished a lot.
We have accomplished a lot.
So I would say plus 15 million, 50% increase in the value of the company is 45. I can put 500,000 to $1 million in.
Okay.
Because you've got a syndicate, I got a syndicate.
Right.
If my syndicate put in 500,000 to $1 million on a note, $45 million cap, clean money, boom, no big negotiation. I just ask you to write me like an update maybe every other month. We good? A little top off from J. Kyle. I put the Rally Road stuff on the shelf here in the studio. I give you a tweet when a new product comes out.
We got to talk about this offline.
What does your gut tell you? Your gut tell you that's a good deal?
No, my gut tells me it's too cheap.
Really?
Yeah, a little bit.
You think 50% increase in value of the company?
Yeah.
What's the revenue increase year over year?
It's irrelevant. It's just what's available to us,
Got it. Oh, so there are people circling now.
Yeah.
You got people circling. So you're going to raise a $20 million round for 20%. You're going to hit 100. Maybe you carve out a $500K for JCal if you do another round. You promise?
This has been a lot of fun. So this, I've
promise
enjoyed this.
You promise you give us a slice for me,
yeah,
so I can try to.
You got to promise me 2 things. You got to go easy on Howard because that's my
All right.
boy.
Okay. So I go easy on Howard.
Go easy on Howard.
And what's the second request?
The second request, you got to remember Greg did the deal with Mark.
Okay, I got that. That's easy. I got that now.
We got to get those 2 right.
No, I just haven't had a chance to work with Greg. So I
he's awesome.
Greg's the
he's
deal.
Fantastic.
I got to be nice to him. Okay.
And Howard, we get you 2 together, have a nice dinner, drinks. I think you could find a common
break
ground.
some bread, find some common ground.
I'll help with that.
Okay.
And
then we're good to put in a milli for 1% or whatever the terms are.
Something like that.
Put a quick million. You got a milli for me? I think I send this video to my syndicate.
Okay.
Here's the thing. Because my syndicate's done 97 or 98 deals at this point.
Yeah.
Most.
I know. I heard you talk it up front. I loved it.
Oh,
it's
you were
fantastic.
there? You actually were one of the 30 people in the room.
I know. Yeah. And
that's the problem with the Upfront Summit. How many people were in the room when you spoke?
Well, I did the VCLP day, so I did an earlier one.
So there were even less.
Yeah. Well, yes, less than yes.
Yeah, but they were good people.
But they were.
So you were the day before me, or
I was 2 days before you. 2
days before me.
Yeah. So I did the LP day.
The problem with the Upfront Summit is he gets so many good people there, and all these celebrities are running around that everybody wants to selfie with the celebrity or talk, and they put out 20 giant picnic tables in a beer garden.
Yeah.
Who the hell's going to go in and listen to anybody speak when there's a beer garden and Chris Bosh and other celebrities walking around.
I'll say, like, I've been to a lot of these things now. It's the best I've ever been to, though. Like,
no, it's pretty great. They've done a good job.
The people in that room are first rate. Like, the production is first rate.
Yeah.
Maybe
a little too produced, actually.
The speakers are first rate. I mean,
speakers were great.
It's incredible. Right.
Like, he had that guy, Adam Schiff, the Intelligence Committee.
Yeah.
They got some good people. It was a little too anti-Trump at times, but he was playing to the LA crowd. But it was a great event. But you got to close the beer garden when people are on stage. But you saw my talk when I talked about it.
I did.
And I think that people who already understand syndicates will understand your business.
I agree. Yeah, we definitely see that to be the case.
Yeah. All right. Brilliant. Listen, continued success. I'm going to be in New York. Let's have a cup of coffee. We'll hash it out.
Put some books in the showroom. We'll get it all set up.
I would like to. I'm dead serious about getting the 2 cars out of the garage. I love these cars. I drive them every month for maybe 100 miles just to keep them.
That's the way you should.
Whatever. And I enjoy taking my daughter out in the Orangina, the first orange roadster ever created, and the 16th roadster. And it's a lot of fun, but it's also a lot of maintenance. And I also feel like a little bit of weight to it. Like if my house, I don't know, if there was a flood or these got damaged or something, I would feel terrible. So when I drive them, I'm like, if some idiot hits the first Model S ever made, I would feel terrible. Or the 60 Roadster. It's not replaceable.
It's literally 001 on the S?
Yeah, 00001.
That's brilliant.
Yeah, it's the first one. Now, there were maybe 20 of them that are called the Founder Series prototypes that, like Steve Jurvetson has the first prototype.
Yep.
Elon had the first 2 prototypes of the Roadster, one he put into space, one he still got, I think.
Yep.
PT1 and PT2, prototype 1 and 2. So anyway, there were those. I actually have 115 of the Model 3 Founder Series. So maybe I'll throw that one in too. And I have 3 collector editions of 3 of the models.
Agreed.
Get them out of there. And then I'll just buy the new supercar.
Yeah, we get requests for this as well. I mean...
collection of them?
For the Teslas, yeah. Without a doubt.
All right. I think we got 2 deals to work on here. Great job. Continued success, Chris Bruno. If you are interested in learning more, go to, what's your domain, rallyroad.com?
Rallyroad.com.
Beautiful. Great name. I actually like the name Rally.
We own rally.app, so we're going.
Just drop road.
We're going to.
Oh, perfect. Okay, so I'm guessing.
Keep getting my product
roadmap.
We're aligned. We're aligned.
No, because Rally, you're rallying around. Because Rally Road doesn't make sense for comic books, but Rally around comic book collections, great.
Exactly.
Awesome. All right, more to come. And thank you so much for being on the podcast.
Thank you for having me.
You're hiring too, I assume. So jobs.rally.
We're all on Angel List. We have a lot of them.
Oh, Angel List, perfect. Yeah, great for hiring people. So go look for that. And I'm assuming you're Chris at rallyroad.com if you want to send a dedicated. Usually the CEO gets first name at the company name. Congratulations. It's really an inspiring business. And I think it's very cool. I'm not sure about the whiskey and the wine, but I'm sure about the wine. I'm not sure about the whiskey, but I know the watch is going to work too. Are people still buying the watches?
Oh, it's huge right now.
Is it?
Yeah. I mean,
you may know Houdinki? You know this?
Yeah,
Houdinki?
of course. Yeah, they're great guys. We talked to them a bunch.
Because they don't do collectibles. They
do.
A little bit. Yeah, do they own
absolutely.
them? Yeah.
Yeah.
I'm an investor in it through Kevin Rose's Watchville. So I was an investor in Watchville, which Kevin Rose did, and then he merged it with Houdinki. And I guess I'm a shareholder in Houdinki, but I don't get updates from them. But they do a good job, yeah?
Very good job.
Yeah, I think they're making money too.
I believe that as well.
They sold, I remember at one point Kevin was telling me, it was public, I think too, eventually. They got one of these watchmakers to give them like the first 10 of like some new brand or whatever. And they did a 10 watch exclusive. They told everybody they were going to do it. They told them what day they're going to do it. They emailed everybody the 10, and these are whatever, 150K watches.
Sure.
10 watches sold in an hour.
Yeah.
I mean, they had previewed it. They have this big pent up demand from their other emails. But listen, I love your business. I think it's the future of investing. I think it's super smart. And the great part about what you do is you're putting a little bit of money into each of these deals. Over time, the investors in your company are going to have 2 swings at bat. I think you should actually maybe have a dual fund structure where maybe you build a fund that people can think, I'm going to get, 10% IRR on that. And then if they want to be in the parent company, you can say, okay, 50-50 it. 50 into the fund for the collectibles and whatever.
Agreed.
50 into here. That might be an interesting way to do it. All right, continued success, and we'll see you next time on This Week in Startups. Bye-bye.